Okay, now that we have the recording started, again, I wanted to welcome everybody to what is our second webinar in our series of webinars. This evening, we've done one already, so this evening we're actually going to be talking about your college loan options. You'll see that many students it's becoming widely used payment method for a majority of college students these days when we're talking about loans. So right now, it's not too early to start researching the different loan options, and that's really what we're going to talk about tonight. We're going to talk about that, and we're also going to talk specifically to UNE a little bit about our payment options too. We want to give you this information early in the process to allow you plenty of time, to ask questions, and also to do a little bit of your own research if you so choose. So this is who you hear speaking. That's me. I'm Corinne Peterson. I'm the Director of Student Financial Services here at UNE. And being so gracious today to join me is Karen Barrows, who's our bursar. She's going to be helping us to mind the chat and try to answer any questions that anyone will have. I'm welcoming everybody who's new to one of our webinars, and then if you were on our last one, I welcome you back. So as I shared, Karen's going to be monitoring the chat for questions, but also there'll be an opportunity at the end of the session to also ask some questions. So we want to make sure that you have every opportunity to get all the information that you need to really help you make a decision to help plan for your students' education. So as I shared, we're really going to be focusing on loans today. We'll be talking about a couple of things that you need to discuss when you are talking about loans. We're going to cover a little bit of ground that we covered in one of our last webinars, just to kind of help frame the conversation. So we're going to discuss how to calculate the net cost, how to make direct payments or set up a tuition plan. We're also going to talk about federal student loans. And we're going to talk about the difference between federal student loans and private loans. And we'll also discuss, when we discuss the federal loans, the loans that a student can take out, that there will be the borrower, and then loans that a parent can take out will be the borrower also. So what we want to do first is we want to review, when we're talking about net cost, we really want to talk about what that is. And really, when we're talking about the direct cost that a student will have coming to school. So we're talking about tuition, and our tuition just recently was set. So these numbers are hot off the presses, and these would be the numbers that you're looking at in fall. So of course, we're talking about tuition, and as you can see, our current tuition for the upcoming year is $39,510. That's the same whether a student takes 12 to 18 credits. We're always recommending to students that they take as many credits as possible, as many as they can, where they can still, be good students. Really starting to have those conversations with students about really trying to graduate in 4 years. And really, students have to take between 15 and 18 credits to really make that happen. Currently, our room and board is estimated at $15,230. That is our meal plan, and we use a standard room charge, which is a triple. Now, understand your students' cost may be more or may be different based on the housing choice that they make. So, of course, if a student wants to be in a single, that cost will be more, will be different than if a student is in a triple, of course. What will happen is once the student makes their decision, and I think that's around June, you'll see that cost will actually show up when bills end up going out. So you'll see your final charge. And then finally, we have our general service fee, and that covers campus activities, clubs, it covers laundry services, it covers printing, transcripts, and access to our facilities like fitness, the fitness facilities and other events. So really, in order to help you plan for what you need to borrow in loans, it's important that we understand how we build a student's budget. So the first thing we're always looking at is direct costs. And I like to say they're the things that are tangible. So tuition is a tangible set amount. Room and board, which we just went over, both tuition and room and board. And then also the general service fees. So there are things that will be charged to you by the university that you'll make arrangements to pay. So that total is $56,180. But when we talk about that amount, I always want to make sure that families understand that's our starting point. It's not necessarily where you're going to end up. This is before we take into consideration any aid that your student received, any loans you would decide to take, scholarships that they receive. So I know a lot of students are really, hitting the computers hard to try to get some scholarships. So all of those things are kind of taken into consideration. We're gonna touch on that more as we continue on through our conversation tonight. So as I shared, we have our direct costs. Then there's something that we call indirect costs. So they're not billed. Books and supplies are a great example. So student is going to have a charge, but we don't charge them directly. They buy their books. Transportation is another one of those indirect costs. Depending on where you live and your student is traveling to, that cost may be more, maybe less. We use a standard amount based on our population of students. But as I shared, that could be different depending from student to student. And then personal, that would be other things outside of transportation, books and supplies. If you have a student on campus and they have, toiletry needs, just regular needs from day to day, things that we would all need are included in that personal. Again, that cost could be more, could be less, depending on every student. But we use, again, a standard amount. So that total is $4,150. So when we put all of those things together, we're looking at a total cost of attendance of $60,330. Now, when we talk about cost of attendance, what we're really saying is if a student wanted to use aid to cover all of the things that they needed to go to school, books, supplies, transportation, this would be the maximum amount that they could receive in aid. I always like to think of it as I always describe it as a pie. So you think about it as putting slices in a pie rather than taking them out. So once you fit all the slices in the pie, whether one of those slices is scholarships or one is loans or one is merit-based aid, once all those slices are in, you're not able to fit any more in. So I always say think about it that way a little bit. I always find it helpful to think about that. So there are several options for families that would like to make payments. As I shared, we did certainly want to discuss that option with you also. The first thing is you can mail your payment in by check or credit card using the voucher on the back of your bill. The bills are sent out in June with the due date of August. You'll be mailing payments to our payment processor located in Vermont. And we just want to make sure that families know we don't have a site in Vermont. There isn't a UNE campus in Vermont. We really encourage you to make online payments. We have an online portal called TouchNet that we utilize. And with TouchNet, you're able to make payments, see your students' charges, look at those things real time. So a lot of us are very, very used to that type of interaction when we're talking about our finances. I have Bank of America. I'm very used to going on their site and seeing, real-time information. And I know that that's where a lot of us, how a lot of us interact when we're financing. So what will happen is if you would like to be able to be the payer or a sister student, they would need to set you up as an authorized user in the portal. And that's something we can help you do. You don't necessarily have to set up now, but always keep that in mind. I always like to kind of remind families that once a student comes to school, the expectation is that they're having the interaction with the university. So of course, we want you supporting them. We welcome you to support them, but with the understanding that if something does happen, we reach out to the student. So we always want to make sure, I imagine a lot of times you say, well, they're not necessarily paying the bill or taking on that responsibility, but we like for them to have an understanding on what's happening. So if something does happen, not only are they able to understand, they're also able to relate to you if needed. So that's always really, really important to us. This is the link to where you can go and take a look at the tuition payment plans and options to pay your bill. So we just wanted to make sure that we gave that to you. And then again, as a reminder, this webinar is being recorded. This information will be available to you once we get it up on the website for on-demand viewing. I just say that because I'm a note taker. So I'm sure if this was me, I'd be feverishly taking notes. And we really don't want you to have to do that. So we're going to make sure that we have it up for you to review. We always recommend that students take advantage of the federal loans. And the reason that we really do that is when it comes to the federal loans, these are loans that are that a student is the borrower, they don't need a co-signer. Those amounts are usually standard and they're pretty low. Typically, a student who is a dependent student, a student who has to put their parents' information on the FAFSA, usually can borrow up to $5,500 in federal loans. And I know that that amount is rather low. What will happen as the student continues on with their program, they'll be able to take more, it will incrementally increase the amount of loans they can take. It's as if the Department of Education says, okay, now you're continuing to show commitment towards your education. So we're going to allow you to borrow additional funding. There are benefits to taking the federal loans outside of it being, the student being the borrower on the loan. There's also the loan is a fixed interest rate, and they set that rate every single year. So it's been hovering around the 5% or so. It will be interesting to kind of see with everything that's happening right now in the country, what that rate ends up being. But just to give you a little peace of mind, it's typically remained in the last couple of years, it's remained around the mid-4s to the 5%. So just for a little context there. As I shared, that's a fixed interest rate, so it'll be fixed for the life of the loan. It certainly is could be a lower rate than a student would receive with a private education loan. And we are going to get into the more information about the private loans. As I shared, fixed interest rate. Student can also, again, like I said, and I keep stressing it, but to me, this part is so very, very important that the student can borrow this loan directly and they don't need a co-signer. The other really, really important feature is that there are options for deferment, forbearance, and forgiveness. And you're seeing that in the corner. So really what that means, a student's loans are in deferment while they're in school. So that means they're on a pause. If they have subsidized loans, those loans, the government is paying the interest on those loans while the student is in school. They're in deferment. They're not paying the loan on the unsubsidized loan. So if you've ever wondered what subsidized and unsubsidized, the difference, subsidized, the government pays the interest on that loan. Unsubsidized, they don't pay the interest on the loan. That's really the difference. The interest rate is the interest rate is the same, and the other features are the same. If a student then graduates from school and they find that they are going into a hardship with repaying their loans, they do have the option of forbearance. So forbearance is a pause. And if you have been listening to any of the conversations surrounding student loans and you're hearing about the student loan pause, that's what people are in right now. They're in a forbearance. So everyone's payments have stopped right now. So that, just to give you some context about how these things really relate to when a student is out of school. There's also, oh, sorry, I apologize, I went one too many. There's also a variety of repayment options on this loan. So if a student, like myself, I'll admit I'm a person with student loans, and students can have income-based loans, or they can, there's a loan forgiveness program that and if anybody's paying attention to the news and hears about the student loan forgiveness that's in place right now, it really is for students who are going to work at nonprofits, and they do have to make a certain amount of payments on the loan. So there's a bunch of options there. I certainly couldn't go over all of them tonight. The link to the Department of Ed's website is at the bottom. Again, I don't want you to have to feverishly try to write that down. We'll have that up again after we get this posted. So once you figure out that net cost and have determined, if you're going to make payments, so that would be either a payment plan or a one-time payment as an option. That would be the point that you would start. Sorry, that would be the time that you will start to look at loans. Many families, as I shared when we first started our conversation tonight, are using borrowing to bridge the gap between the cost of attending and the rest of the students' financial aid awards. When it comes to loan options, we're looking at a couple. So if you see, we have private student loans, and we also have private parent loan, and then a private plus loan. And as I shared, we're going to go over what those all look like and what that means. When we're talking about, anytime we're talking about a parent loan, that is always think of that as, I always like to call it sponsorship. So you're sponsoring, you're taking the loan on your student's behalf. So always think of it as a sponsorship. A private student loan is a loan in a student's name, and we'll really talk about how a student would be eligible for that or what would need to happen. So it's important to remember that every dollar you borrow does add up. It could be significant. So the cost of attendance. So remember, how we figure out how much you need to borrow and how much you can borrow is your cost of attendance. So remember, it's all of those pieces that we talked about: tuition fees, like I like to call it the tangibles and the intangibles. And then you subtract your financial aid, any financial aid received, so your student's merit award, if they're taking the federal loans, any scholarships they received, and then that amount left over would be the maximum that you could receive in a loan. We do always say, even though you can take the maximum, we really want to make sure that you're not necessarily taking the maximum. And, as many of you know, when you're, like myself, you understand when you're borrowing, there's a cost to borrow. And then at some point you're paying that back along with your cost to borrow. So if you notice, we're talking about how much you can borrow versus how much you should borrow. So that would be your bill cost minus your financial aid, minus if you were able to make any payments or any out of pocket. And then that should really be your loan amount. So you really want to make sure that you're, being judicious with your borrowing. And we always like to remind students too that this is a 4-year investment. So we want to always make sure that they can get to the finish line. So the difference between the parent loans and the private loans, these are the options that we're talking about. With the Parent Plus loan, as you can see on the screen, the parent is the borrower. So like I said, think of that as sponsorship. That's how I always am able to think about it in my own head. It's a sponsorship loan. It's similar to the direct loans. The federal loans are typically always fixed, so they always have a fixed rate. So if you see the current rate is 6.28%, similar to with the students' direct loans, they reset that rate every single year. Once you take your loan and they disperse your loan, your interest rate won't change for that loan. But let's say now your student goes on to be a second year student, and then when you borrow, that loan you take out and the loans that they take out at that time will have that different interest rate. The Parent Plus loan does not look at credit. It looks at adverse credit. So really what it's looking at is if you have any bankruptcies, foreclosures, or more than 90-day late payments. So they don't look at debt to income ratio. They're not looking at your FICO score. They're just looking at that. There are some fees to borrow the Plus loan. So right now, the current fee is 4.228%. And just for everybody's information, that rate has remained the same for the last couple of years. So I don't believe that it's going to change because it's been hovering in the same place. So typically, if a family decides to go with the Parent Plus loan, what we have you do is figure the amount that you need, and then we calculate the loan amount on top of it because they take that right off the top before they send the money to us. There are some options for students if the Plus loan becomes, if a family gets denied for the Plus loan. Students can be eligible for increased unsubsidized loan. And we're going to talk about that. I've got another slide in the deck where we're going to talk about that more in detail, what that looks like. So the other option is the private loan. And with the private loan, the student is the cosigner. The student is the borrower. We do have there that the student would need a cosigner. It says parent, but I always like to say it's anybody who would be willing to support the student in their education. Aunt, uncle, there are a lot of grandparents that co-sign. So it truly does take a village to get a student through school. And I always say, think about who those people are and who your village are, and that's how you can start to plan for that. The rates could be fixed or variable. It's dependent on the lender and really the credit score of the co-signer. I imagine most of your students are 18, 19, maybe 20 years old. Students of that age just do not have enough credit to take those loans out on their own. So they always typically need a co-signer. Credit score is used, so they do look at debt to income ratio and all of those other things that they would look at in your other borrowing situations. A lot of those lenders don't have fees to borrow their loans, so that's always something to keep in mind. And as we shared, we students always typically need a co-signer. I've been doing this for some time, and I usually see that students are usually 20, in their late 20s before they've now built enough credit to kind of take those loans on their own. So I say that to keep that in mind. So more on the Parent Plus loan. First, be sure that if you decide to take the Parent Plus loan, that you're choosing the Parent Plus loan when you go onto the Department of Ed's website and not the Graduate Plus loan. So that's an option for students when they're in a graduate program because they're independent students. They can borrow. They also have the option to borrow a loan. The loan will appear on the parent's credit report, similar to any credit you decide to take out or open. You're going to have that that credit check is going to show up on your report. The parent will also complete a master promissory note, similar to any borrowing that you do. It has your terms and conditions on it, and your master promissory note, you're agreeing to pay the loan back. You can choose your type of repayment, the Plus loan. You can defer, and typically that's kind of years ago, it used to be you needed to opt into deferment. Now it's more of a, they've kind of changed it where now you have to opt out of deferment. So what that really means, as we were talking about deferment before, the payments don't begin on this loan until a student graduates or is no longer enrolled for at least half time. So that's typically 6 credits. That could be different depending on program, though. You do have the option, as I said, for immediate repayment. That would be something that you would set up directly with the Department of Ed when you decide to take that loan. As we were kind of talking a little bit ago about what happens with a denial of the Parent Plus loan, there's really 3 options. It does allow a student to borrow additional loan monies in their name. The unfortunate thing is the amount is still is capped and is still rather low. So for a student who's a first year or second year, we're talking about an additional $4,000. And then for juniors and seniors, that amount is $5,000. A parent does have the option to use an endorser. So that's really a co-signer for the plus loan. When you complete the application, they let you know if you're approved or denied. And if you're denied, they let you know if you have the option for the endorser. You also have the option to appeal with the federal government, with the Department of Ed, if there was something that is showing on your credit report that you know is in error. They do allow you to kind of work with them to try to resolve that if as I shared, if there's an error on your credit report. Just a reminder that the loans cannot be transferred to the student. You may be able to refinance it with some other lenders, but that goes from lender to lender. So we always say that would be something that family, if they decided to go that route, would really need to research with some of the other lenders. So now we're going to talk a little bit about private loans. We're going to go back a little bit and talk about those. Just to let everyone know, UNE and many other institutions do this too. They do have a preferred lender list. And all a preferred lender list means is that we've vetted the lenders that are on our list. It doesn't necessarily mean that you need to utilize them. You can choose anybody that you prefer to work with. I always say if you build a relationship with a bank or a credit union already, and they offer a product, always, I would always go have a conversation with them because you already have that pre-existing relationship. For the lenders on our list, I have a slide for each of them. We're going to go through it, but probably a little bit quickly. Again, I really want to be mindful of people's time, but I'm also going to, we're also going to show you a link on where you can review all of this information when you have an opportunity. So one of the first lenders on our preferred lender list is Sallie Mae. So what you'll find with a lot of these loans, they're really in competition with each other. So you'll see that a lot of their rates and options look very similar. So I think it really comes down with families, who's going to offer you the best rate. So one of our lenders is Sallie Mae. We also work with Citizens Bank, a name that a lot of people know. They offer, as you see, if you look really quickly, offer the same kind of options. Again, I don't want anybody to feel like they have to, remember all the information on these slides, because again, I'm going to give you a link where you can see all of this information, and then you're able to kind of do a bit of research at your leisure. So Citizens Bank offers loans. One thing you may be able to know, and not necessarily right now, but definitely when you do go and start to do your research, some families really like that some lenders offer cosigner release. It depends on which lender, if number one, they offer it, and number two, what the time frame is. A lot of times they expect the student to make a certain amount of payments, and then they'll review to see if they can release the cosigner. Sometimes that's a conversation that a family can have, and it gives the cosigner a little bit more peace of mind in borrowing. So the next lender is Discover. As you see, as you're noticing, all of these lenders, no fees. The thing about Discover that's just a little different is they're really known for their customer service. So some of the lenders, you'll get them, during those usual hours, 8 a.m. to 8 p.m. Discover does offer 24/7 customer service. So if that's something that's really important to a family, I always say make sure that they know that. The Maine loan is offered by the Finance Authority of Maine, and that would be for those of you who are residents of Maine. So it's a very trusted Maine state-based lender. So if you're not a resident of Maine, and if you're a resident of another state, you can always look to see if they have a financing authority or a student loan authority. I'm a Rhode Islander, so we have RISLA, and they're the Rhode Island Student Loan Authority. Massachusetts has NEFA. So Vermont has BSAC. So you can always, it's usually just a quick kind of Google search, and then you can find the one within your state. Sometimes they offer a better rate to the folks within their state. So Custom Choice is one of the lenders that we've added rather recently. And as you can see within their first slide, as we were talking about that option for the cosigner release. So with them, they're offering cosigner release after 36 consecutive on-time principal and interest payments. So again, that's one of those options that you could be aware of and look at when you're making, your decision. And we also have Union Federal, another lender, competitive rates, as I shared. As we go through these lenders, their rates and what they offer will look similar, more similar and similar and similar. And then, as I shared, BSAC for those who are residents of Vermont, same thing, competitive rates, variable fixed interest rates. But what I really do want to show you is the factors that you really have to look at when you're kind of making the decision if you're going to go with a private loan. So the first one is going to be if you're eligible. So we will say families, and most people do know their credit situation. So if you would be able to be in a place where you would be able to borrow a loan. Then we say definitely take a look at the interest rates. Because remember, this is going to be the rate that you're being charged to borrow this funding. Then fees, if the lender has fees. If you notice, a lot of the private lenders don't have fees. Plus Loan certainly does have fees. But I always say there are pros and cons to taking both. And it really comes down, I always say it comes down to what the priority is for a family on how they decide to borrow to cover, if they borrow to cover the balance. And I do see some questions popping up in the chat. I just want everybody to know, don't worry, we are going to get to your questions. I know Karen's in there trying to help answer some questions, but we will also get to them. I just want you to know we see you. The other thing is loan limits. Some lenders do have a limit on the amount of lifetime borrowing you can do. And that's something you always have to take into consideration, remembering, as we talked about, this is the four-year. We want this to be a 4-year investment. So for your investment for your student, what that's going to look like and how you can plan accordingly kind of going forward. And then the repayment terms. Do they offer cosigner release? Are you able to get a reduction on the interest rate based on good payments? Things of that nature. So also, if they offer in-school deferment or interest-only payments while you're in school or immediate repayment, you'll again have that option with some of the lenders. And again, as I go back, it's really going to be what is a priority for a family on how they kind of choose to go with that. The repayment options do affect your rate. So we really want you to do that research. And just also remember too, we're here if you need us. You can cook. One thing that's different about our office that I actually really, what I really like and I take pride in is you can call our office and you can get somebody on the phone and we can sit and have a conversation with you. I actually met with the family myself this afternoon. You can get all of us. So we're here and able to help get you through this process. We're partnering with you during this process. We also recommend that you look at those borrower benefits. Like we were talking about the interest rate reduction, or do they offer some type of graduation benefit or their scholarship opportunities? Again, ways to reduce the interest rate. Do they offer a reduction after a certain amount of payments? And customer service, which all of us want to know that we are able to get our questions answered and have confidence in the information that somebody's giving to us. So that's also something that you could take into consideration while you're looking for a lender. We do have there are always some frequently asked questions that we know that families typically ask. So we did really I wanted to touch upon some of those. Again, I see questions in the chat. We are going to get to you. I'm definitely going to answer your questions. We're getting there. We are slowly getting to the end, and then we can dive into your questions. So one of our first frequently asked question is, what happens if you want to reduce the loan? You can always reduce the loan. Depending on when you do it will depend on how we can reduce your loan. And let's say it's before the academic year starts and your student gets another scholarship and you want to reduce the loan. You can just give us a call and we'll go ahead and we can get that reduced for you. Let's say your student has finished their first semester and now they get a scholarship over the break. And now you want to apply that towards their spring. Again, you can give us a call and we can find a way to get that reduced. So you can always give us a call and we can find a way to do that for you. Can I apply for a loan on my own without a parent? As we discussed before, students who are coming in for their first year typically do not have enough credit to take the loan out on their own. So they will always need a co-signer. So just to keep that make sure that we keep that in mind. If someone co-signs for a loan, will it be on their credit report? It will be. It is similar to any commercial borrowing that you do. There will be a credit check on that loan. Do I apply for a loan every semester, every year, or for all 4 years? We really encourage students to borrow their loan for the entire academic year. That's so that they know that they are set for the year and able to be concerned about their studies and joining clubs and doing all those wonderful things that we want them to be doing while they're on campus. We want to say we don't want families to worry that you've now taken out this loan and let's say your student decides to withdraw or they decide to transfer. We only receive, when we take out a loan for the year, we only receive the amount for that period we're in. So student starts in the fall semester, and you borrow a loan for the year, we only receive half of that to cover the fall semester. So if, let's say at the end of the fall semester, they decided to transfer or decided to leave school, we don't see that. We don't see the second piece of that loan. Because it's not dispersed to us. I need to have my bill paid on August 1st, but the loan will not disperse into December. What do I do? Why we're having these conversations now, as I shared, a couple of reasons. We really want families to have the opportunity to do some research and really feel comfortable in the decisions that their financing decisions. We also want to make sure that, as we shared, we don't want your student to come to campus and be worried about their finances. So as long as if you decide to go with a loan, if you have the loan in place early enough, we know that you've worked with the lender has approved your loan, and really we're just waiting for the semester or the academic year to start. Then we'll wait for the funding to come in, and it typically will come in after add drop. And that's also another protection for you, so that, let's say, your student decides to attend school and they find maybe it's just not a good fit and they leave before add drop. Those monies won't be dispersed to us. So they do have a small window at the beginning of the semester where they, have that option. So as I shared, this is the list of UNE's recommended lenders. There will be a link to all of these lenders. As a matter of fact, I'm going to give it to you right now so that you can see that you can find that right on our website too. So these are all the lenders we discussed. Again, you're not required to utilize any of those lenders. You can go with anybody that you're comfortable with. Just a little on how you navigate our site. Once you go on, you'll have the option, if you see this panel on the side, where you're able to sort and filter the lenders. So you can look at repayment type. Do they look at satisfactory academic progress, past due balances, and you can filter your results by using those. Also, too, if you see, there's a calculator up in the corner, and you can utilize that to also do some other comparisons with loans. So you can choose the loan amount, the length of the loan, and kind of get some ideas on what payment, depending on what you borrow, what payments will look like and how much that will cost you. So we're gonna review the timeline for obtaining a private loan. Of course, we want you to do all the research that you need for the loan. Then you choose your loan type that's best for you. And then at that point, you would apply with the lender. And then most lenders have the option to complete online, and that's what we would really recommend because you'll get an instant decision from the lender. You'll receive your credit decision, usually instant, which, many of us want to know, that answer right away, as I would too. Any approved applications will be sent right to the university, so we'll know that you're approved. And then we'll certify the loan. What that means is we'll let the lender know that yes, your student is a student or is planning to be a student, so that they know they can send us the funding to cover their tuition. And then once your student starts attending, the loan will be dispersed to us. So what's next on your checklist? So you want to determine your possible direct payments. That's something that your family will sit down and discuss. You'll want to review your credit report. You can do that, as I think many of us know now, you can go and get 3 free credit reports every year. And then do your research on the different loan types, and then figure out which loan is the best for your family situation. That will be determined by credit situation, who's going to be the borrower on the loan. Then determine the amount that you're going to borrow. So looking at if you're going to do a tuition payment plan, looking at if the student's going to have some summer employment that they're going to use to contribute. And we always remind you, do not over borrow. We want to make sure that you have just enough, but not too much. And then at that point, apply for the loan. As I said, most lenders, you do it right on online. You get an instant decision. They'll notify us that your loan is approved, and then we'll certify. And then, of course, as we shared, you can adjust the loan at any time if need be. You can email us or give us a call. So really hope that this information will really help you all plan for your students' UNE education. Like I said, I'm going to go into there's some questions in the chat right now. So I'm going to go in, I'm going to read those out loud because some people might have the same questions. If it's something that pertains particular to your private situation, of course, I won't read those ones, but we're going to go into the chat so we can see some of the questions that we have. So first question. Oh, it looks like Karen, in her wonderfulness, has been answering questions within the chat. So that's been really, really beautiful. Karen, do we have any other questions that we may want to read out loud so that we can answer them for folks?
I did respond to anything I did receive to everyone. And then as you were speaking, I was making comments just ahead of time, just because I've been doing this for a while. So I know like maybe those would answer somebody's questions. But I do have a question about the $500 deposit that somebody just asked. The $500 deposit, so 200 of that is for housing. That will be held in the, it's called our deposit table. So you won't see that applied to the student's account until the student graduates or leaves the university. And so we do encourage students to set up a direct deposit refund account. So whenever that is, they'll get those funds back. The 300 of that 500 you will see on the fall bill. So that is your admissions deposit portion. So you will have a credit of $300 on your bill in the fall. And the general service fee is applied every semester. So it looks like somebody asked that question as well. So you have tuition, the general service fee, room and board charges. The other charge, and I hope you don't mind me just mentioning this, but the other charge on the bill is every July, every fall on the bill is going to be the student health insurance. You will have to waive that if you have health insurance. So you'll have to make sure you waive that so that charge is credited to the account. And the 14, oh, so Corinne's numbers, because she's more on the financial aid side, she talks, the numbers she's presenting tonight are for the year. My side of the house is by semester. So it's $720 a semester for the general service fee. I'm sorry. No worries. You can always unmute yourself and ask the question if you'd like as well.
Karen, thank you so much for that. It looks like there are a number of questions that were sent to me directly. So I'm going to go through those for everyone so that they know we answer their questions. So first question is, can you make payments on a loan that is in deferment? You certainly can. Even beyond a loan being in deferment, especially if you go with a private loan, you have the option to choose a loan that you make payments while the student is still in school. And there's actually those loans typically give you a better interest rate, but also with the direct loans, or if you decide to take the plus loans, you can always make payments on those and there's no penalty for early repayment on those. Question about how much a student can borrow on their own. So most of your students are going to be first-year students, so they can borrow up to $5,500 in federal loans. That's set by the Department of Education. That's not a number that UNE sets. So if your student is looking at a number of schools, you're going to notice that amount is going to be the same with any of the award letters that you receive. payments are due, I'm not sure if the person's asking when payments are due on the loan, so I'm going to answer it that way. Payments on the federal loans are due 6 months after a student graduates or withdraws from school. These are great questions. There was a question about why would someone use a private lender? Are their terms better and are they more flexible? You're not required to, if somebody asked a question about, is that better than utilizing the loans with the FAFSA? It's a faster route. What I always say is that a family's priorities are going to decide which loan they utilize, whether it's the plus loan, the federal plus loan, or whether it's the private loan. Like Karen was saying, she's been doing this some time. We've both been doing this for a little bit. And typically I see families who really want that guaranteed fixed interest rate, a lot of times go with the plus loan, but that's because that's their priority. Or some families really want the student to be the borrower on the loan, even though they co-sign. So if a family feels strongly about that, they'll go with the private loan. So as I was sharing, it really comes down to priorities. And that's why we say when you're sitting down and planning and you're looking at your options, you have to make that decision on what the priority is for you. And that will kind of give you a bit of a path. So I hope I answered that question. Are all of these lender options for private loans or also for subsidized loans? These are great questions. The subsidized loans are direct loans. You take them out directly with the Department of Education. Many, many years ago, you used to be able to take federal loans through, lenders like Citizens Bank. I want to say it was around 2008, might have been 2010, that they moved everybody into direct loans. So if you're borrowing federal loans, you're always doing that directly with the Department of Education. Somebody asked, do I recommend private loans or Parent Plus loan? Again, as I shared, I always say it's really truly it's what your family decides is a priority for you on which way you go. I do always say there are more protections built into the plus loan and they are easier to get for a family. But it is a loan that's in the parent's name. So it's that's that bit of push and pull there with that loan. With that decision, I'm sorry. Can you comment on federal loans versus privates? Are privates the majority of the credit provider, a portion mixed with federal, etc.? I hope I'm able to answer that question, try to answer this question. With private loans, that's where you're going to see all of your private banks. And then I think I answered that a little bit in the last question. And then the federal loans are directly with the Department of Ed. And you typically will use a mix of those to cover your students' tuition, because we always do recommend that the student borrows the direct loans, which would be with the federal government. And then at that point, you would decide if you're going to do the plus loan with the Department of Ed or go with a private lender. So I hope I answered that question. Okay, it looks like I answered all of the questions. Hopefully. Just remember, here's our contact information at the on the screen. Again, you don't have to write all of this down. It is also on our website. We really would love for you to make appointments with us. Again, that's what's different about our office. We're really interested in partnering with you to help set your students' education off right. So here's our hours in the office. That's our phone number. You can look any of us up and send us emails or phone calls. I get direct emails and phone calls. I'm a counselor at heart, so I love talking to families. So just know we are here to work with you and partner with you. And just to also let you know, our next webinar, the Deposit and Beyond, will be next month on May 11th at 6 p.m. There's a whole list of webinars on our website. You can sign up there. And we hope to see you at our next webinar. Thank you so much for taking your time this evening.